there were challenges, right? So, like, what are some of the opportunity areas that you saw over the past 12 months that you'd like to see some improvement as we head into 24?
Still coming out of COVID. I'm concerned. I think kind of the industry's concerned about the parts and labor that created and built some of those products. They got whatever part they could get. They had anybody they could on working on the line, putting those pieces together, and they got the products out. But knowing all that, there's a huge margin opportunity for members that really lean into product protection and offering extended warranties on all their products.
Welcome into the Independent Thinking Podcast. This is your host, Rob Stott. In our kickoff episode of 2024, we talked about some of the things our retailers are doing, and we're seeing independent retailers do across the nationwide network to set themselves up for success in 2024. And Patrick Maloney did a fantastic job setting us up for a full year of podcasts here. And some of the things he mentioned, throughout that interview and throughout that episode are things that, I don't think once, if you go back and listen to it, did we talk about specific product categories or, some of the trends we're seeing there. It was more about focusing on the business, right? So things like marketing and websites and digital and those other business and financial services that you can look at and, find some hidden cost savings or hidden dollars to be earned, based on some other activities, we'll call them non-traditional, but really it's non-product related activities as far as, independent retail is concerned. And wanted to dive a little bit deeper into that, into those topics. So today we're following that up with sort of another, kind of kick the year off right and give an outlook on some of the things that are happening in the business and financial services realm, and doing so with Mr. Chris Kirk, our SVP of Business and Financial Services. Who better, right? To talk about that and really diving into all of that, right? Looking at areas of the business that you could focus on as an independent retailer, and taking a little bit of time to look at the economics of today's landscape and where Chris sees things going, what he's hearing from our partners in the space, and of course looking at some of those opportunities, whether it's product protection and alternative credit and payments and things like that you might be able to lean into this year. Important topic, one that gets plenty of attention, but probably still in my mind, not enough. And that's why we're, having Chris on the podcast here to toot that horn a little louder this time of year. So let's get into it. This is Chris Kirk here on the Independent Thinking Podcast. All right, we are back on the Independent Thinking Podcast and blessed today to be joined by Mr. Chris Kirk, our SVP of Business and Financial Services, to help kick off a new year of podcast, episode 2. So you have to follow up PJ, just so you know, in order.
Okay.
Patrick Maloney, he was our season premiere, so you got it in you to follow him up with the good episode.
Doing my best, Ron.
Awesome. Well, hey, I appreciate you having the time and availability, and I know our members are going to appreciate, the opportunity to hear from you as well. So, let's start off. How are things? How you doing?
We're good, man. We're at the end of the year, right? I think it's been a tough year for everybody. So I know we're ready to see it come and go. It's brought some challenges to us, right? It's brought some opportunities as well. But always looking forward to what we can do better. And I think that's what 24 is going to bring for us.
Yeah. So I mean, everyone's felt it, right? We've all been through it, but I think I told PJ the same thing almost. You could probably direct quote me from the previous episode, but end of year is always a good time to look back, but also look forward a little bit as well. So I love doing these this time of year for that exact reason. Might not want to look back. It's like one of those years you want to put in the rearview mirror, right? just like go forward, put the pedal to the metal. But to kind of recap it, I know we all lived through it, but how did it go in terms of expectations? Was it better? What are you guys seeing?
Yeah, so it's kind of a mixed bag, and it looks at what different service you're looking at. So it's kind of
Yeah.
focusing in financial services. Consumer finance for the membership was up. Like we had almost double-digit growth this year. It's not too surprising, right? The zero interest, no interest
Yeah.
finance offers, they resonate right now, right? If you look at your car rate or your home rate, everything's gone up. So if you have a 0% offer at 18, 24 months, customers are naturally going to be attracted to that. So we've seen an increase in applications and dollars, and the members that have leaned into consumer finance and promoted it on their website and offered it in store and really got, you probably heard Patrick say back to the basics, but presenting that early and often to those customers has driven some results and some good results, and our members needed it. We've seen the average sale price increase as well. So everything about consumer finance, other than the rates to the member. So yes, we know what happened with the Fed rates and historic increases over the last 18 months, right? And some of that's been passed through. We were able to mitigate a lot of it from Wells and Synchrony from our partners in there, but we did have rate increases last year. Not surprising. We just heard the Fed mention kind of the outlook for next year, though, that they're looking at some rate decreases. So we'll see where that ends for next year and kind of look at 24. But for now, we've been able to hold as Nationwide our promotional rates for the members. So any supporting vendor that we have, we've kept our promotional rates the same, even though that everyday standard rate did increase some this year.
Yeah, talk about that. You're kind of diving into like surface level, but for those that might not the benefit of the group, right? Yeah, there are those rate increases, but talk about that and kind of, what it's negotiating, but like what can you like tell members about what work goes on behind the scenes to make sure, or the power of the group, right? Like being
Yeah,
able
so
to
the power of the
leverage.
group is really
Yeah.
just aggregating all of the members and their volume and collectively going as one voice to our bank partners. And they truly are partners. Synchrony and Wells do a great job with us and figuring out what's best for the members when they can handle these rates. It's no one likes to give them, no one likes to receive them, but we mitigate those as much as possible, and we use our billions of dollars in finance power to negotiate and hold out those rates as long as we possibly can.
No, that's I think an important thing to reinforce, right? Because it's one of those
Yeah,
it's what you do, but it's kind of taken for granted, I'm sure at times, right?
yeah,
No.
yeah, absolutely.
What are some of the there were challenges, right? So like what are some of the opportunity areas that you saw over the past, 12 months that you kind of, I don't know if it's maybe focus on them more going forward, but like areas that you'd like to see some improvement as we head into 24.
Product protection's been an area that's followed our units down. So as you look at your units down, the attachment rate on appliances, which is where most product protection occurs for us, there is some in furniture and bedding. But I still think there's some opportunity there, still coming out of COVID. I'm concerned. I think kind of the industry's concerned about the parts and labor that created and built some of those products, right? So I think it's a good opportunity. They got whatever part they could get, whatever switchboard they had, anybody they could on working on the line, putting those pieces together, and they got the products out, right? So it took longer than any of us wanted to. But knowing all that feels like a great opportunity to increase your attachment rate, and there's a huge margin opportunity for members that really lean into product protection and offering extended warranties on all their products, right? Centricity is our partner, our third-party administrator that administers our Epic program. They've done a great job, I think, over the last 12 or 18 months. They had some new leadership come in. Ted Morthy's done a really good job bringing a new life to that company and kind of revising, refreshing all the way from the ground up. So excited to see what that team will do. But I feel like there's a lot of opportunity left for members. And if it's not Epic, or one of our other partners that we have within Nationwide, whoever you're using, I think there's a lot
Yeah.
of opportunity to continue to push those extended warranty
Like,
programs.
you mentioned it's one of the things I kind of ask it knowing the answer, right? But it's like one of those things you brought a different sort of explanation to it, right? Because I didn't even think about it from they were pulling whatever parts they could to make these appliances, so they and whatever it was to get them out the door, right? I'm sitting here thinking from the consumer side too. They, as budgets tighten and they are making these purchases, they're not going to want to make it again. So it feels like a really easy sell from, hey, if you don't want to bash the product you're trying to put out the door because of how it was made, instead you could turn that conversation around and talk about the benefit to the consumer not having to shell out extra dollars if something does happen to go wrong.
Absolutely. It's a better experience for the customer.
Yeah.
And another opportunity, Rob, thinking about better experience for the customer, as we've seen, credit card utilization for customers at I think historical highs. I don't think
Yeah.
they've ever been this high. That credit card balances have remained this high for customers. Knowing that, right, your FICO score is predicated on your credit utilization. So we're starting to see a decrease in FICO scores, which is going to translate into a decrease in approval rates for your primary, like your Wells and Synchrony and First Consumer. We worked hard with Synchrony and Wells to have waterfall programs where a customer comes in and has a pretty frictionless, seamless experience where they put in their information, right, how much they make, their social security number, address, all that jazz. And then if they get declined from one of those primaries, then it automatically gives that customer an option to kick to a secondary or tertiary lender. So as knowing everything I just said, right, making sure you have one of those options, and sometimes secondary or tertiary options, our members don't always lean into. There's a stigma almost out there about having these lenders out there. But I know it's going to become more and more important that members consider having this and give that customer who needs to make that purchase another option because they didn't get qualified for their first and they don't have the savings sitting in their account to go make that purchase. We've seen, on the merchant side, duress purchases are at an all-time high right now. So higher than they've ever been. Washing machine breaks, I need a new one, refrigerator's dead. Give that customer, make sure we have an option for that customer to walk out with and make that purchase inside your store.
No, that's I think a truly important thing. I don't know if it was officially rolled out in August. I feel like we were talking about it before August, but August felt like the launch point for when these programs might have been officially
It
introduced.
was, yeah. Synchrony's been working on it for a
Yeah.
while. They built theirs in-house, so it's all
Yep.
through their business center in-house. And right now they stop at a secondary in Genesis, and they're working on their third leg, which would be a lease-to-own provider in there. Wells Fargo went in contract with a third party who has a seamless integration in theirs and has all of the lenders already built out and ready to go.
Yeah.
So both the providers have been out there, and these waterfalls aren't new. They just haven't
Right.
always been integrated directly into the primary lender, which I think is going to take away this extra friction or expect it to.
Yeah.
Going.
And isn't there, if correct me if I'm wrong, but the consumer benefit too, a lot of, it's sort of sensitive to them, right? Like it's something where they can do, go through all this privately and it's not like they get declined at the counter when they're trying to apply and that sort of stuff. So there's more to it that's a benefit, obviously, for the retailer who can get that customer approved one way or another, but to the customer as well, something that they can kind of talk them through and help them understand the benefits of that process.
Yeah, great point. They can do it on the privacy of their own phone, actually. So they can
Yeah.
scan a QR code in store, start to fill that out. That helps drive that customer's purchase decision right then, knowing that they've got and typically raises their ASP in the store, knowing that they can spend $4,000 or $5,000 or whatever that granted limit was. So
Hey,
yeah,
have you seen any good examples of customers of members that have, implemented those programs in their stores or that are doing it really well?
yeah, there's several of them.
What kind of says you don't even have to call them out by name, but like how are they setting it up or like what are they doing to
Couple
have
of different
success
ways.
with it?
One is like we will help provide all the POP material with the QR codes that scan directly into their own personalized portal where they can start that application online. So they have printed materials they can have. They have POP pop-up tents they can have at the point of at the register. And we also have using Nationwide's Prime Media, we also have it where we can tie it into our digital signage network. So you can have that on the TVs inside the store, talking about no interest financing offers, and then a QR code that would link directly to that application.
Well, you talk about I love the omni-channel experience, right? And having that as part of the conversation around, what the in-store experience could look like. That almost those pop-up signs around the store almost feels like banner ads that are on a website, right? Like they're everywhere, but they need to be, right? Like you got to continue to see it. So it's just sort of, there's subliminal messaging as you're walking
Yeah.
around the store about these opportunities.
Yeah, and they work too, right? It's a silent salesman in there, and we've done some A/B testing on members that have them and don't have them, and it's night and day the number of applications that come in when you have those inside the store. So you got to have them to you got to let your customers know that it's an option.
Oh, that's awesome. Any other areas you could be a yes or no to this, but any other areas that you'd like call out to a member that would be great for them to focus on in the new year? If we'll get
Uh,
to kind of the economic conditions moving forward and what you're hearing, but is
yeah,
there a good chance or is right now a good opportunity for them to focus on anything else?
um, it's a good question, Rob. There's so many that we have about 100 different business financial services that we offer the group. Financial services seems like the low-hanging fruit, just knowing everything that we just went through with the economic factors that are out there. But it's always a good time. We've got great point of sale partners that are out there and making sure you understand all the benefits that we can bring from there, and those tie into our prime metric system. And all the data utilization that comes from there and the information to make better choices on the merchandising side. Digital price tags have been big for us this year, and the increased adoption of those tags and the labor and the savings that members are seeing from not having to print out those tags and always sure that their pricing's correct across all different channels are touching those customers. Our service leaders network team has done a phenomenal job in the last 18 or 24 months, really bringing together and uniting, that self-servicing dealer and making sure they have competitive labor rates, sharing peer-to-peer networking. Like I've just been amazed at the
Yeah.
job that's doing for us and helping out that channel that was
Yep.
needed some help, quite frankly, right? Because coming out of COVID again, that's when we really realized there was part shortage on getting those parts that we talked about earlier for
Yep.
product protection. But they've done a really, really good job bringing together all the distributors and making that a much, much easier, painless process for the members.
Yeah. What's clear is that, to your point, there's a lot, right? There's a lot
Yeah,
that you and your team are doing. Might be helpful from your perspective too. Like, what would you tell a dealer? How, since there is so much, what's a good way for them to approach this category, these business and financial services, or like evaluate themselves and like where they should put their focus? Because I mean, they're sitting here
yeah,
probably thinking, that's a lot for me to try to figure out where I need to put my efforts. So what
it
would you
is.
tell them?
Yeah, I think we're really good and always trying to get better at listening. So I think the members have plenty of retail problems and they can quickly point out to us where those biggest pain points are, and we can help go solve those problems for them. Our member support team, member support managers, everybody on Patrick's team that you spoke with last week, do a really, really good job of kind of listening first and then understanding what those pain points are and where we think we can help them. And can also do a complete analysis of their business and say, hey, I see some holes here. Have you done this? Prime time is probably, I think, the best place to go see it all, right? Like it all kind of comes together. We've got most of all of our service providers there. You have your merchants there. You have your NLA courses. So it's like you've been there. You do
Yep.
all your podcasts from there. It's a huge sticking point and bringing all the different components that are nationwide and making it real easy as easy as we can for members
Yeah.
to understand the true value of the group.
It's like a fresh aha moment every 6 months. It
It's
really like
right.
to do that. I mean, you see, and we talk to each other frequently, right, across business units and everything. But to see it, even for employees, like for nationwide staff, like coming together, the team, it's always a big aha for us as much as it is for members that attend, I'm sure. So, um,
Yeah, it's fun to watch any new employees, right, that join the group and they kind of get components of it and they've met with people on
whoa,
Teams a lot like
yeah.
this or Zoom. And then you get to prime time, you're like, oh my God,
It
I
makes
get it.
sense now. It makes
Like the light
sense.
bulb comes on, right?
It's incredible. No,
Yeah.
but like I mean, to summarize that, right? Like kind of what you're saying is, it's important for members to know that there is a lot, right? Like there are so many services that, whatever your challenge is, we probably have a solution for it. And even if we don't, right? And I think Tom even said this, back on the stage, in Nashville this past August, like, if we don't have it, we'll work with you to go out there and find it. So even if it's a problem that we haven't necessarily faced yet with a member or one of our independent retailers, something where we've got the team and support, on a team like your business and financial services team to go out there and tackle it for you or with you.
Yeah. And a lot of them come just from members.
Yeah.
So I'd say we typically add, anywhere from 4 to 8 new vendor partners a year. And it's most of them are not most, but probably about half of them are recommendations from members of a program that they've had that really worked for them. And they want to share it with other members. We've set up these regional meetings in January, right? And a lot
Yeah.
of that's feedback from those members of those challenges that they're facing in their day-to-day market. Rarely are they ever alone. That you have this one problem by yourself and you're the only retailer that's selling, everything in our categories that's facing this challenge. So we listen to those members. They tell us what those problems are, and we work together as a group to go solve them.
Just me trying to develop a soundbite. You're probably more likely to hit the Mega Millions or Powerball than you are to not be able to find someone that has the same problem as you in this group. So,
Yeah, absolutely. Yeah,
it's
you're not
unbelievable. Yeah.
yeah.
But so, looking ahead to 24 economic wise, obviously you got your finger on the pulse. You're talking with these, Wells and Synchrony and all of our other financial partners throughout the year and seeing what's going on. So what are the sort of conditions that you're hearing? I know Wells does they all do their quarterly kind of
They do.
economic updates. So what have you been hearing and kind of what direction are we heading to as we get into 24?
Yeah, so great point on the Wells Economic Outlook, right? We do those quarterly through the Wells
Yep.
Fargo, the CEF, the inventory finance team helps pull those together. They're pretty industry specific, right? And
Yep.
I'm no economist and won't ever pretend to be one. So I would highly recommend if anybody's listening that's not tuning into those are posted on MemberNet, every quarter with links to get in there and listen to the true economists tell about what they think is going to happen. They're still pretty bullish on some type of recession happening. That's very different than what we heard or I heard. The Fed say just like this week about the outlook for next year and the freezing
Yep.
or
Yep.
lowering even of interest rates. So I think it kind of depends on who you talk to. It seems like it's been like that for the last
Yeah.
18 months. Like some people say we're out, some people say we're halfway in. So I think there's still some uncertainty there, and that uncertainty, causes for me and I think for other people, just more uncertainty. Like what's going to happen? So it just kind of keeps spinning. I'm pretty optimistic about next year and us coming out 23s. I think everybody's felt traffic's been down. They're coming off two really, really good years where customers were just pouring in. We had our unfair share of discretionary dollars because nobody was traveling and all the stuff I think most everybody's heard before. But 20 and 21, and even some of 22, uh, we're much easier, right? And we're having to go
Yep.
back to, I said earlier, back to the basics to fight for those customers. You're having to advertise. You're having to compete against big box stores that are just slashing their prices and killing the margin out of programs that we've been, making money off of for the
Yeah.
last couple of years. So it's going to be interesting. We'll see what happens with the housing. The demand still seems there. The interest rates are where they are right now, but those could be coming down and create more interest again for next year. So I think it's just going to be important. We keep on keeping on,
Yeah.
like we've done for so very long.
I,
I have faith in the independent channel more than any other group, right? Like it's we're
it's a
gonna get there.
resilient, yeah, it's a resilient bunch. And I feel like I've had this conversation specifically a couple of times, if not even on this in this format, but just in phone calls. You look at those last 2 years. I feel like economists see the numbers and like the direction. They love looking year over year, right? And
Yeah,
we were coming off of two pretty historic years in
right.
terms of spending and like how willing customers were and how much discretionary money they had available to them. So to comp year over year against like historic years, there's going to be a little bit of a pullback. so
Yeah,
so that it's just natural. But at the same time, like even to your point, in the face of all those kind of dire expectations from economists, you look at we're still, as we're talking, in the middle of the holiday season. There's still some pretty historic spending on during the holidays. So
yeah,
customers out and about, traffic wise, online and in store, moving around. You look at those Adobe analytics reports that come out, and National Retail Federation, they were showing
not bad.
pretty fantastic spending.
Yeah,
so the consumer continues to, as resilient as independents are, it feels like the consumer has continued to be resilient as well, despite all the predictions and everything that's out there. So, um,
yep.
no, awesome to hear that insight. And, for as confusing as it is to everyone else out there, it's, I guess, important to know it's confusing to us too. So consumers are going to keep doing what they do. So, oh,
Amen.
so we can only hope. But no, this was a great opportunity. I think maybe we need a quarterly Kirk update. Quarterly Kirk, that sounds
Okay.
fun,
I
doesn't it?
love that.
That's
I
got
love
a
it.
catchy ring to it.
Right.
No, that's awesome, man. Well, we appreciate the time, and maybe look forward to catching up with you on the next quarter. So
I
you
look forward to it, Rob. Thanks for having me on, man. Really appreciate it.
bet. Awesome. And thanks again to Chris. Like I said, a topic that we talk about probably a lot, but not enough if you ask me, just because of, knowing how much potential there is in the business and financial services space to, find some of those hidden cost savings or, dollars to be had. So something that we'll continue to cover throughout the year, whether in podcast form, on the Independent Thinking blog, of course, in our Independent Thinking magazine, which you'll see at primetime here shortly, and in other ways, at Nationwide Marketing Group. So appreciate Chris taking that time and diving into a really important topic with us, and look forward to seeing how our members take advantage of these opportunities. So appreciate him, and as always, appreciate you listening to the Independent Thinking podcast, and we'll catch you next time.